Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's 40% higher, 25 points up for the Nifty.
Markets going a bit slow and not at the same frenetic pace that we've seen the market go.
Validating for our markets after a huge rally.
Market is up 15 points, which is not a bad outcome given the fact that at one point it was looking like it is selling off.
CESA we've been talking about right from the start of the day. It's off the high, but still 6-7% up. So 1,000 plus on CESA as we are closing out. Good day for KEC International, 8.5% up. Good day for Kajaria, 11% on the higher side.
Sensex and Nifty zigzag in a narrow range and end flat. Nifty remains firmly above 11,500 marks. Sensex ends just a shade below 38,300.
Technology and pharma stocks outperformed the key indices to become the top performing sectors of the day. The Nifty IT index gains almost 1% and the pharmaceutical index gains 1.5% and ends firmly in the green.
Cement stocks get a boost after a bullish report by Macquarie, which pegs the earnings at an inflection point. India Cements, Ambuja, ACC and Ultratech lead the rally.
Strong domestic passenger traffic growth for July failed to lift aviation stocks today. Headline July traffic rose a healthy 21% year-on-year. Analysts, though, pointed to a weak base in July of 2017, when growth was just 12%.
Debt-ridden JP Associates heads to the National Company Law Tribunal after the Reserve Bank rejects a plea from bankers seeking a special dispensation. The central bank refuses to make an exception and rules out any out-of-court settlement. Well, those were some of the top headlines from Dalal Street today. Hello and welcome to Markets Today Talkback. This is the show where we tell you about all the 6 hours of the day's trading action in just 5 headlines. I'm Lata Venkatesh with my colleague Prashant Nair. Hi, Prashant.
Lata, hi. So, a bit of a pause maybe. Not a 0.5%, 1% rise that we're used to, but not a bad outcome at all. We discuss what happened today in just a bit, but over the next 30 minutes, we'll of course also tell you the top stories which dominated the day's action. Our guests will take you through the sort of answers to the questions that you send our way. Mitesh Thakkar and Sanjeev Pasina are the 2 gentlemen on the show. Thanks very much, both of you, for being with us here. And before we start the Q&A session, let's quickly take a look at what really drove markets or failed to drive markets in a way. Lata.
Oh, yeah, you put the question very nicely. What failed to move the markets? Today was quite clearly a day when the market was looking for direction or probably catching its breath after the hard run. The global indices actually showed a decent amount of green and we were in a sense underperformers. But, well, we had run harder in the previous day. So that perhaps accounted for it. Well, what are the global cues? Dollar was a little lower, oil was a little higher, the rupee was flat as flat can get, and so were the bonds. So really, it was not an ambience which generated too many cues for the markets to move. But there was a lot of sectoral churn, and the leadership today clearly went to IT and pharma. Despite the fact that the rupee was not falling today, IT and pharma led the rally, and so did cement and building material. For independent reasons, probably Kerala reconstruction, probably a Macquarie report, but these were the stocks that were the vanguard for the bulls. For the bears, there was the private sector banks, didn't do very much except for Axis, which seemed to do well and again fell by end of day. As well, you know, the usual suspects, autos, metals, none of them were the vanguards for the bulls. But not too much of fall either. Stock specific, what was spectacular?
I mean, so cement to begin with, diving straight into sectors. In terms of sectors, as headlines also pointed out, IT and pharma were the only 2 strong points. Ambuja Cement, Grasim, sort of top gainers as far as large caps are concerned. Tech Mahindra was strong. I mean, actually, it was up a lot more. It sold off with the rest of the market by close. Coal India, Lupin, Axis Bank. I mean, some stocks that Lata also pointed out. Large cap stocks which lost. DLF has had an unbroken nice run, about 15% or so. It gave up some of those gains. Tata Steel was lower, and Lever was down about 1.4% as well. I mean, broader market gains, lots to talk about. I mean, Suvain, Kajaria, CESC, Cummins India, NIIT Tech, NIIT Limited, actually both the NIIT names, UPL saw a surge. Glenmark was strong. Radico, Sequent was up some 14-15%. There was Varun Beverages, which was pretty strong as well. So just sort of giving you a sampling of what went on. There was enough on the losing side as well, but there wasn't really anything very large to report about. I mean, the losses were in the range of between 2 to 3 odd %, broadly speaking. So just sort of limiting my point here as far as broader gainers are concerned.
Okay. Well, actually, let's take a look at the breadth of the market. That was, oh my God, even Stephen, 1:1 in terms of advances and declines. That gave you an indication of how things were very, very even-handed today. But let's ask our guests, where do we go from here? Break out or break down? Mitesh and Sanjeev Avitas. Mitesh, that question really is to you. What is the day after tomorrow trade?
Yeah, evening, Lata. I think neither of them. I would choose consolidation. I think the breakout has already happened. We have seen fresh highs, if not on the Bank Nifty, at least the Nifty. And, in the last few days, and we've been highlighting this point, we've rallied from about 11,340-50 zones to about 11,550 and take it a couple of weeks back, and we've rallied from 10,940 to 11,550 without any kind of significant correction or consolidation. So I think, given the fact that we are placed too far away from the short-term averages, consolidation could happen. But as long as 11,400, 450 doesn't get broken, I wouldn't be really worried. And you might just chop around in a 100, 150 point kind of range for the next few days before eventually resuming the uptrend.
Okay, well, let's move on to the second headline of the day. IT and pharma stocks were the top performing sectors of the day. Nifty IT index outperformed the key indices to gain almost 1%. Tech Mahindra led the rally, rising about 3%. There was an upgrade, which we'll talk about in a bit. HCL Tech, Wipro, Tata Elxsi were some of the other big gainers on that index. Pharmaceutical stocks also had a run, pretty good run. The index was up 1.5 odd %. Glenmark had a good run, gaining almost 5%. Cadila Health, Piramal and Lupin all rose more than 2% in trade today. We've got a question.
Yes, Rahul Nikunj Soni has tweeted to us with a question on Aurobindo Pharma. He has been holding 100 shares of the company, he says, purchased at 605 rupees. He says he's a long-term investor and wants to know whether he should hold or sell. That question to you, Sanjeev. If you're tracking the stock, what would you have the gentleman do? What is that, 605? So he's slightly in the money, 10% in the money.
Yeah, so Lata, our call is that pharma is going to be the sector of 2019. It has been a huge underperformer for the last 2 years, but given the ambit of a lot of FDA clearances, Sun coming out with better than expected numbers, and now the relaunch of a lot of generic products, we think their pipeline locally and globally seems very much on the positive. Aurobindo is one of the largest players in the injectable market. It has been a relative outperformer. The margins this time are actually pleasantly surprised on the upside. We have a near-term buy call with a target of 750, and we will wait for more upgrades on the results. And if that holds true, then within the next 1 year, you could look for targets closer to 820 on Aurobindo Pharma.
All right. Thank you very much for that. A quick technical word, Mitesh?
Well, that comes with a disclaimer that I have a futures position over here for last few days. And Aurobindo Pharma, I think in the entire pharma pack has been very interesting. Aurobindo Pharma, in my sense, has given a good breakout about the 625, 630 zones. And I started rally. The minimum target I'm looking at is closer to about 690, but there's a good chance that I'm looking at targets close to about 750, 760 if you give it about 2 months or so. So I think clearly a hold over here in case you get it mildly cheaper on a 20-30 point dip. I think I would not even shy away from adding on to positions.
Okay, so short term or medium term, keep it, is what our experts are advising. Actually, the next question is on a stock that is not a very volume-driven stock, but then there could be viewers like this Twitter user, Gavi Siddhesh. He's bought shares of Sasken Technologies at 1045 rupees. And he wants to know how long he should hold this stock.
Price is 950 right now.
950. So he's lost money. I think he's brought it recently because I think that 1,000 plus number was just a little while ago on that stock, probably in April or May. April, actually. Well, since it looks like short term and he's at a loss, Mitesh, it's for you.
Lata, I think the stock went to about 1120 odd levels in June and then has corrected, doing a good base building around the 900 mark. So 890 should be a stop loss. I think it's been doing a range of about 900 to about 995. let it start close about 1,000 again, and then I think the minimum target should be 1125, which was the earlier highs, and possibly even cross that and make higher highs. So as of now, hold with a stop below 900 and look for targets of around 1125.
Okay, Mitesh, thanks very much for that. Well, we move on to the third headline of the day. Strong domestic passenger traffic growth for the month of July failed to lift the aviation stocks higher. The headline July traffic rose a healthy 21% on a year-on-year basis. In fact, analysts pointed to a weak base in the month of July of 2017, last year, when growth was just 12%, which actually was the lowest for the last financial year, F518. So coming off a low base, that's a strong 21% growth. The concern also remains as to whether the growth that we've seen in this last month, July of 2018, came largely as a result of discounts and various offers which were put up by aviation companies. Sonal Bhutra is standing by with essentially a breakdown of these numbers and, of course, looking at this company-wise. Sonal, your analysis.
Well, yes, that's right. All the aviation stocks were in focus today because DGCA had come up with the passenger traffic data. The growth came in at 21% on a YY basis in the month of July. This was despite the lean season because the companies had been offering competitive fares. And for example, Indigo had an offer starting 1,200 rupees per ticket on the domestic fares. This also could be because of the reason that the base was really low. The growth in July 2017 was around 12.5%. That was the lowest in the year 2017. Now, if we talk about market share, Jet has been losing its market share. In the start of the year, it was around 16.1%, and now it has fallen to around 15.1%. Indigo, on the other hand, has been seeing an increase in the market share that has come in at 42.1% versus 39.7% in the month of January 2018. In terms of passenger traffic growth, Indigo reported a strong passenger traffic growth that came in at 31.5%. SpiceJet saw some traffic growth of around 5%. However, it was very muted for Jet Airways that saw passenger traffic growth of only 0.5%, and that could be one of the reasons why stock was under some pressure today. Back to you.
Oh yes, Sonal, it was. And I think that obviously represents a loss in market share, and that was reflected in the stock. We have a question on Jet, though, bound to be. Madhukesh Kumar from Bangalore has written to us. He has been holding 150 shares of the company at 435 rupees, and that he's been holding it for the last 2 years. Wants to know if he should hold or sell. Sanjeev, this will come first to you. 435, should he buy or sell? Should he hold or sell?
Yeah, so it's a dichotomy. The company is losing market share and there have been internal issues regarding corporate governance and, the can of worms. However, the caveat here is Jet always does this every 4-5 years. And like you said, the inherent consumption-led growth is maximum visible in the aviation space. I've been doing a lot of travel for the past month, and even for flights of 1.5 hours, you have to report 2.5 hours before. And Delhi today is it's handling the largest passenger traffic anywhere in Asia. So I think that these are very, very these are times where actually there is a lot of quirkiness on the stock price, but the future looks very bright. I would actually tell him on a rally to get out of that and try and get into an Indigo or a SpiceJet.
Sure.
We have a very positive coverage on both of those.
Okay. But still, quickly, Mitesh?
Yeah, so I think, Jet to me looks like a stock which has gone into a longer term downtrend, but it's fallen a bit, so maybe it will give a bounce back. That should be an exit opportunity. Close to about 340, 345, I think is a good exit opportunity. The stock has fallen directly from 840 to now at about 260, 270 odd zones and is trying to recover. But I think around 340, I think the rally could beat out, and that will be a good exit opportunity.
All right, Madhukesh, our experts say ride the airline wave, but not on Jet.
Okay, we will take a very quick break on that note. Stay tuned. We'll leave you with some market opinion that we got through the course of the day. We'll be right back. We've got more stories to cover and more questions to answer. Back in 2.
Notwithstanding modest weakening in the rupee and the political uncertainty before an election year, the economic fundamentals from a bottom-up standpoint are very solid. The mid-caps are also riding the wave of good economic fundamentals. So, again, the global risks notwithstanding, I think global risks, we have lived through some of the fears. Global trade war, that fear seems to be somewhat receding. It doesn't look like that's about to break out in a big way. And Fed rate hikes, I think the market's gotten used to the fact that the US Fed is on a steady rate improvement cycle, but is not looking to do anything dramatic that'll cause liquidity to dry up.
Compared to the situation what was about 6 months ago, at the end of calendar year 2017, when mid caps and small caps were on a roll, I think the main deterrent was basically valuations, and at that point in time, valuations were completely untouchable. Since then, we've seen a fairly decent amount of correction in the mid cap and the small cap space. The index itself has corrected quite meaningfully, and then individual stocks have done even more so. So I think now at least we are in a position to assess some of the companies that we liked earlier but were unable to buy. We'll get a fairly decent chance to build a position in the mid and small cap space for an eventual return target of 2-3 years and beyond.
Welcome back. Still with us here on Markets Today Talk Back. We've been taking your questions. Our experts have been answering them. Mitesh and Sanjeev are still with us, and we're going to go across with them on more questions. We covered 3 of the top 5 stories. Here's the 4th one. Cement stocks got a boost in trade today after a bullish report by Macquarie, the broker, which pegged the earnings at an inflection point. Macquarie said that the demand growth for the sector will improve going forward. India Cements, Ambuja, ACC and Ultratech led the rally. Nigel D'Souza is here with more details on what Macquarie's thesis really in this report was. Nigel, over to you.
Well, that's right. Macquarie is quite bullish on the cement space on the whole. The few important factors that they pointed out is the capacity addition in the next couple of years. They're estimating it to grow up by nearly around 4%. Now, that compares with 11% capacity addition on an annual basis that we have seen in the last few years. Demand growth, they're expecting cement demand to grow up to around 7.5%. Now, that compares with around 4% that we've seen in the last few years. And they're saying the sector's capacity utilization levels should jump up to around 72%. That compares with the mid-65% that we've seen in the last year or so. Cement prices as well, they're saying that they're expecting to grow up by nearly around 4 to around 5% on an annual basis. And they're expecting cost to more or less stabilize at these levels. That will give you an EPS growth of nearly around 29% in the next few years. In terms of stocks they like the most expensive stocks. Ultratech Cement, Dalmia as well as Shree Cement, while they're neutral on the likes of ACC as well as on Ambuja Cements.
Okay, thank you very much for that, Nigel. Well, so they are expecting capacity to now grow only by 4%, while demand will grow by 7.5%. So at some point in time, the excess capacity will get utilized. Macquarie speaks of about 70% capacity utilization already. We spoke with N. Srinivasan of India Cements, and he's doing even better. He told us that India Cements has reached 80% capacity utilization in the first quarter that ended on June 30th.
First quarter of last year, we worked at 67% utilization. First quarter of this year, we worked at 80%.
Wow. Okay.
And going forward, I expect this to improve. This is what I said in our analyst conference. And this is caused by, there is improvement in retail demand, but infrastructure is really a very huge demand. Roads, dams, everything seems to be being built now, and this higher capacity utilization will ultimately translate into much better prices.
Okay, Mr. Srinivasan there of India Cements painting the picture for his business. Raj K from Gujarat has sent us this question. His question is on Orient Cements. Holding 400 shares of Orient Cements, his price has been 165 rupees a share. Been holding them for the last year. Wants to know whether you should hold or sell. Orient Cements, 400 shares of Orient Cements at 165. Sanjeev, I don't know if you track this one. Any thoughts?
So, Prashant, cement as a whole is looking extremely good, and we were contrarians in the last 3-4 months. We've been very, very bullish when nobody on the street was actually buying cement. And now this unfortunate event in Kerala will actually spur the demand in the south even more. We also know that the monsoon season is going to end, and we could see a huge upside over there. I would advise the gentleman that whenever he gets a rally, try and exit this smaller name, get into a quality name like an Ultratech, ACC or a Shree Cement, where the visibility and the brand image will definitely make you more money in the slightly longer term.
Okay. Nevertheless, he may want to know what he should do with Orient Cement. Mitesh, what are, I mean, it's in the green today, but has had such a fall.
See, I think most of the cement stocks have corrected, and the large cap ones have started, getting into an uptrend. Orient Cement is yet to do that. I think maybe around the levels of 100, if it can do some base building, then I think the stock can give a reversal and head towards 150. But broadly, I think I would agree with Sanjeev's idea. I think, get into the larger cap cements, that's where the outperformance or the longer term signals are still very intact. Even an Ambuja looks better, which is a low beta stock, looks better than most of the mid cap cement stocks.
Okay. And our fifth headline for the day is the big CNBC TV18 exclusive. Our colleague Ritu Singh learns that the Reserve Bank of India has rejected ICICI Bank-led consortium's plea to allow a special dispensation for Jayaprakash Associates. Remember, ICICI Bank-led consortium had requested the central bank to allow an out-of-court settlement for JPA, as they believe the company could soon turn a new leaf. Basically, JP Associates was in the list of 29 companies that Reserve Bank asked banks to take to the NCLT, but the bankers from that day have been saying that Jayaprakash should not have been in that list, because even before the RBI order, they were almost ready with a package. Ritu Singh has been tracking the story very closely, and here she is with what she heard from what RBI said. Ritu.
It is a setback of sorts for Jayaprakash Associates as well as its lenders, because we understand from sources that the Reserve Bank of India has rejected the plea made by ICICI Bank on behalf of a consortium of lenders to JP Associates and not allowed any special dispensation which will be allowed to JP Associates. Remember, earlier when the Supreme Court had allowed RBI to drift banks to JPA into NCLT, ICICI Bank had made its case in the RBI saying that out-of-court settlement, which was a debt restructure plan for the company, was already in place and was approved by a majority of the lenders, and therefore it could be prevented from going into NCLT and then restarting the resolution process all over again. But the Reserve Bank of India, in no uncertain terms, has made its stance very clear to the bankers that there will be no exceptions made for any of the accounts that feature on RBI's defaulters list. So it looks like ICICI Bank will have to soon start the process of filing for insolvency as far as Jayaprakash Associates is concerned and send it to the NCLT.
All right. We must note that in the past, the few instances that have been decided by the NCLT, equity value has been near zero. The stock spiked today, but fell with equal alacrity when Ritu broke that story, realizing perhaps that if JP Associates goes to NCLT, the current rules don't allow the promoter to reapply, in which case a new promoter may come in, take hold of the debt, but write down equity. At least that was the experience in Bhushan. So if the lender has lost, equity should not get money, but will the lender lose everything would be a question. So that's interesting. The market has still kept JP Associates also slightly in the green, but this is going to be a legal tangle that we will have to see when it plays out. Sanjeev and Mitesh, thank you very much for staying with us and answering all our questions. And all of you out there, have a great Eid-ul-Zuha, and we will see you on Thursday.